Good morning, everyone. I welcome you all to the 102nd session of Zentax Talks. Firstly, I would like to thank you all for giving full support for our Zentax Talks. Through your support, we have crossed more than 100 sessions. This is in today's session, we will discuss on job work under GST and also the Form ITC 04 and related filing provisions in Form ITC 04. We will start the session. First, we will see provisions related to job work. Thereafter, we will see the ITC 04 provisions. First, we will see the charging provisions in GST. As we all know, Section 9 provides the charging section, is the charging section in GST. As per Section 9 of the CGST Act, it is mentioned that there shall be levied a tax called goods and service tax on all supplies of goods or services or both. So in the charging section, they have mentioned goods or services or both. So now we will see the definition given in GST for goods. Section 2, subsection 52 mentions goods means every kind of movable property other than money and securities, but includes actionable claim, growing crops, grass and thing attached to or forming part of the land which are agreed to be served before supply or under a contract of supply. Now we will see the definition given in GST for services. Section 2, subsection 102 provides that services means anything other than goods, money and securities, but includes activities relating to the use of money or its conversion by cash or by any other mode from one form, currency or denomination, to another form, currency or denomination, for which a separate consideration is charged. So from this definition, we need to understand a very important point, that is, here the services means anything other than goods are covered under services. So to clarify that, the job work is considered as a supply of services in GST. From the definition itself, we can see all other things other than goods are covered by definition of services. So job work become taxable under the GST provisions as a supply of services. Now we will see the definition given for job work in GST. Section 2, subsection 68 states that job work means any treatment or process undertaken by a person on goods belonging to another registered person, and the expression job worker shall be construed accordingly. So from this definition, we can see job work means it can be any treatment or process undertaken by a person. So they have not mentioned that a job worker should be a registered person. So as per the definition, a job worker can be registered or they can be an unregistered person. They also mentioned that the goods must belong to another registered person. So from the definition, we can see the principal should be a registered person. To understand in simpler terms, the job work means it is a process which is undertaken on goods by a person, that is the job worker, that belongs to another registered person. That is, goods belong to a registered person who is the principal. On that goods, job worker undertakes an activity or they undertake a process on those goods which are supplied by that registered person. So even though the person supplied such goods for job work, the ownership of those goods does not shift to the job worker. The ownership still remains with the principal. We will see the definition for principal in CGST Act. Section 2, subsection 88 mentions a person on whose behalf an agent carries on the business of supply or receipt of goods or services or both. So from we can from the definition of job work, we have already seen only a registered person can send the goods for job work under the provisions of section 143(1), that is the job work provisions. To understand job work in a very simple manner, we have taken 3 real-life examples. One such major industry in which job work is very popular is the garments industry. So let us take an example to understand this. Let us take in a garments business, the principal is ABC Garments Private Limited. So they are Delhi-based registered person. Here the job worker is XYZ Stitching Unit, which is based on Noida. So that person is job worker is also a registered person. Here the process flow is the job worker, that is the garments owner. They are sending fabric to job worker under delivery challan. So on that fabrics, the job worker performs cutting and stitching. And on completion of that garments, they are sending back the goods to the principal. So in this case, the job worker will raise invoice only for the job work charges, that is the stitching charges which they provide. So the principal can take ITC on the GST which is charged by the job worker. Another popular example is the jewelry industry. So many jewelers they send their goods, that is the physical gold, to another job worker, that is the local jewelry maker. So that person makes the gold and they makes the jewelry and they send back to the owner. This is one example. Here the principal is MNO Jewelers. So they are Mumbai-based person. The job worker can be any local jewelry maker. So this person can be a registered person or they can be an unregistered person also. Here in this process, the goods, that is the gold, were sent to the jewel maker under a delivery challan to make the jewels. Here the jewel maker converts such gold into jewelry and they send back the finished goods to the principal. Then thereafter, the job worker, that is the jewelry maker, he charges a making charges. So on that making charges, GST is levied, and the principal, that is the person who sends the gold, they can take ITC on such making charges. Another example is in engineering industry. Here let us take ABC Engineering Private Limited. They are based on Chennai, GST registered person. They are sending their goods to Precision Manufacturing Machining Works, which is based on Coimbatore. Here, the principal sends raw forgings to job work under a delivery challan. So the job worker, that is the Precision Machine Works, they perform CNC turning, drilling and finishing, and thereafter the finished product is returned to the principal. So for this machining charges, that is the job work charges, which is done by the job worker, they issue an invoice. So principal and they send back the goods. Here the principal uses the finished goods for further supply or manufacture. So these are all the real life examples from which we can understand job work. Moving on, we will see the registration provisions for job worker. Job worker, like any other taxable person, they also liable to get registered as per the provisions of section 22 of the CGST Act. Section 22 applies to normal persons. So those provisions only shall apply to job workers also. Here, every supplier shall be, as per section 22, every supplier shall be liable to be registered under this act in the state or union territory from where he makes a taxable supply of goods or services or both, if his aggregate turnover in a financial year exceeds 20 lakh rupees. As we have seen, the job work services, job work are covered under services. So the turnover limit for such persons is 20 lakhs. If the job workers turnover, that is the job work charges which they collect, crosses 20 lakhs in a financial year, then they are liable to get registered under the GST Act. For the purpose of computation of aggregate turnover, there is an explanation given in section 22, that is, the supply of goods after completion of job work by a registered job worker shall be treated as supply of goods by the principal referred to in section 143, and the value of such goods shall not be included in the aggregate turnover of the registered job worker. Here, the point we need to note is that the value of goods supplied by the principal to the job worker will not be included in the aggregate turnover calculation. Only the job work charges or the services undertaken by the job worker will be included for the purpose of aggregate turnover. Moving on, we know section 24 of the GST Act deals with compulsory registration under GST. So we know this section is a non-abstinence clause. That is, the section starts with notwithstanding anything contained in subsection 1 of section 22. They have in section 24, they have listed scenarios. They have listed persons for whom registration is compulsory in GST Act. One such exception is a person making any interstate taxable supply. If a person is making any interstate taxable supply, then they need to get compulsorily registered. To understand this better, let us take an example. KS & Co. Lates is engaged in doing only job work to RD Machine Works. That is, they are doing job work in the same state. So the total job work charges received is only 12 lakhs. Now this company KS & Co. they got a special order from Bangalore for machining. That is, they got an order from another state for a job work. So the value of such order is 1 lakh. So in this scenario, should KS & Co. get registered for undertaking the interstate supply of job work? That is, here the person making only local sales, so their turnover is within the limit for registration. Now they got an order for interstate supply, and that value is 1 lakh. So there is a relaxation for registration for job workers, and this relaxation is clarified in notification number 3/2019 IGST dated 29/1/2019. In that notification, it is clarified that person having interstate supply of taxable services and having an aggregate turnover to be computed on all India basis not exceeding an amount of 20 lakh rupees. That is, for a job worker, even though they make interstate supply, their aggregate turnover should be calculated on an all India basis not exceeding an amount of 20 lakh rupees. This compulsory registration for interstate supply is not applicable to these job workers. Even though they make interstate supply, only if their turnover crosses 20 lakhs, they need to get compulsorily registered. It is also further clarified in circular number 88/7/2019 dated 1/2/2019. In para number 6.1, they have mentioned, it is clarified that a job worker is required to obtain registration only in cases where his aggregate turnover to be computed on an all India basis in a financial year exceeds the threshold limit, regardless of whether the principal and job worker are located in the same state or in different states. So from the circular also, we can conclude that we should see the turnover on an all India basis, and not just if any interstate supply happens, they should get compulsorily registered. Next, many people have this doubt that only a manufacturer can send goods for job work purpose or not. That is, should the job work come only from a manufacturer? The answer is no. The definition, that is the definition for job work, as we have seen earlier, in that it is mentioned the treatment or process undertaken by a person on goods belonging to another registered person will be considered as a job work. In the definition itself, they have mentioned goods belonging to another registered person. They have not mentioned that such registered person should only be a manufacturer or something. So even if a person is a trader, they can send the goods for packing they can send the goods for job work, and that will be considered as a job work. To understand this, we can take another real life example. Let us say, here in this scenario, the principle is, that is, the trader is Fresh Spice Traders. They are based on Jaipur. So they have sent, so they are making spices, and they are sending their goods for job work for packing and packaging purpose. So they have sent their goods for packing to Packwell Services, Jaipur. The goods here is loose spices. So these loose spices has been sent for packing, and after packing, the job worker will send back the goods to the to the principal under a delivery challan. They will pack, seal, and label the spices, and these packaged goods are returned to the trader. This Packwell will issue a tax invoice only for the packing charges. So thereafter, the trader can avail the ITC on the job work charges, that is, the packing charges charged by Packwell Services. Next, we will see the legal provisions in job work. Section 143 of the CGST Act has mentioned the job work procedures, and Section 19 of the CGST Act has mentioned taking input credit in respect of inputs and capital goods sent for job work. Rule 45, that is the Rule 45 of the CGST rules, contains the conditions and restrictions in respect of inputs and capital goods sent to the job worker. We will see one by one in a detailed manner. First is Section 143, job work procedures. Another common doubt many people have is that, is there any requirement to pay tax when the goods are removed for job work by the principal? Actually, the answer is no, but this is subject to conditions. Section 143, subsection 1 has provided a registered person, hereinafter in this section referred to as the principal, may, under intimation and subject to such conditions as may be prescribed, send any inputs or capital goods without payment of tax to a job worker for job work. So in this section, they have clearly mentioned that the principal can send the goods under a delivery challan without any payment of tax to a job worker for job worker purpose. But the benefit provided under the Section 143(1) is only optional. Principal may also remove the goods on payment of GST, and they can get back the goods after completion of job work on payment of tax. This is an optional provision. So the principal can follow any methodology. This is further clarified in Circular Number 88/7/2019, dated 1/2/2019, wherein they have clarified. It may also be noted that the registered person, principal, is not obligated to follow the said provisions. It is his choice whether or not to avail, or not to avail of the benefit of these special provisions. So it is at the option of the supplier, that is the option of the principal, whether they can send the goods with payment by paying GST, or they can simply send the goods through a delivery challan. We will see the time limit to get back the goods from which were sent for job work purposes. To receive back the goods, there is a time limit for the manufacturer. The principal manufacturer must receive the goods back within the period. In case if it is a capital goods, the goods should be returned back within 3 years from the effective date. If it is a input goods, that is goods other than capital goods, then such goods should be returned back within 1 year from the effective date. We will see the effective date, which is the effective date is separately. If in any case the goods are not received within the prescribed period, then this will be considered as supply from the effective date and tax will be charged. So here we need to be very careful while sending the goods for job work. If it is an input goods, then we need to get back the goods within a period of 1 year from the effective date. If it is a capital goods, we need to get it back within 3 years. If at all we missed to get back the goods, then we need that. Then even though we send the goods as delivery challan, that will be considered as supply, and we need to pay GST with effect from the date we sent, along with applicable interest. We have discussed the goods should be sent back within 1 year or 3 years from the effective date. So what is this effective date? We will take two different scenarios for this effective date. If at all any goods is sent from principal's place of business, that is, the principal is sending the goods directly from his place of business, then in such scenario, the effective date will be the date of goods, the date of sending of those goods, that is the date on which the goods were removed from his place. That in another scenario, the principal can direct his supplier to directly deliver the goods to the job worker. So if we see in many practical scenario, instead of receiving the goods from the supplier and sending to job work, many principal, that is the registered person who is sending for job work, they directly procure, they direct their suppliers to directly send the goods to their job worker. So in such case, the effective date for sending the goods will be date of receipt of goods by such job worker. That is, the date on which the job worker has received such goods will be treated as effective date. So from this effective date, the principal should get back his goods within a period of 1 year in case of input goods, or within a period of 3 years if it is a capital goods. What happens if the goods are not brought back within the time limit? If it is an inputs and the input goods and they are not received back or supplied within 1 year, then it shall be deemed that such inputs had been supplied by the principal to job worker on the day when the said inputs were sent out. If it is a capital goods and they are not received back and supplied within a period of 3 years, then it shall be deemed that such capital goods has been supplied by the principal to the job worker on the day when the said inputs were sent out. There is one exception to this time limit, that is, this rule to send back the goods within 1 year or 3 years does not apply to the mentioned goods alone. The goods other than this, the time limit shall apply. We will see the list of goods. That is, the list includes molds, dies, jigs, and fixtures or tools sent to a job worker for carrying out job work. So goods other than this, we need to follow the time limit. Waste or scrap. So this is another common question, that when the job worker undertakes the contract, there will be a generation of some waste or scrap. So for that waste or scrap, who should pay the tax? So here, if the job worker is a registered person, then the tax shall be paid by such job worker. In case the job worker is not a registered person, then for that waste or scrap, the tax shall be paid by the principal himself. Next, we shall see who is required to maintain the books of accounts and records. The responsibility for maintaining proper accounts and records shall lie with the principal manufacturer. The principal manufacturer here is required to issue a delivery challan for every dispatch made to the job worker, and the details of such challan shall be disclosed and filed through Form ITC04. So here the responsibility for maintaining the books of accounts and records primarily lies with the principal manufacturer only. As we have discussed, now we will see how to move the input or capital goods to the job worker. Here, Rule 55 of the CGST rules, they have mentioned that in that rule, they have mentioned the scenarios where the transportation of goods can be made through a delivery challan without a actual tax invoice. In section 55, job work, in rule 55, job work is one such situation where delivery challan can be issued. Now we will see in rule 55, they have mentioned the contents of delivery challan. That is, while raising a delivery challan, these items shall be mandatorily mentioned by the principal who is sending the goods for job work. First thing is date and number of the delivery challan. Next, serially numbered, not exceeding 16 characters in one or multiple series. Name, address and GSTIN of the consignor if registered. Name, address and GSTIN or UIN of the consignee if registered. HSN code and description of goods. Quantity, taxable value, place of supply in case of interstate movement. So rule 55 prescribes what are all the contents that should be mentioned in the delivery challan. So while a principal who is sending their goods for job work purpose, they need to mandatorily mention all these details in the delivery challan, and thereafter only they shall be liable to send the goods to the job worker. Now we will see who is liable to take ITC on job work. As we know, the principal manufacturer can avail the input tax credit on the purchase of on the job work services which they have been billed. So there is a scenario where goods will be sent to the job worker from principal place of business, or the goods can be sent directly by the place of supply of the supplier of such goods. So under both these scenarios also, ITC will be allowed only for the principal manufacturer who is sending the goods for job work. Even though he sends the goods from his place of business, or he direct his supplier to directly supply the goods to the job worker, the ITC, that is the input tax credit, can be availed only by the principal manufacturer who is sending the goods for job work. As we have seen, the effective date for sending the goods, it depends on the place of business. That is, if the goods is sent directly from principal's place of business, then the date of goods sent out will be the effective date. If it is sent directly from the place of supply of the supplier, that is directly from the supplier, then in such case, the date of receipt by job worker is the effective date. Now we will see the penalty provisions for violation of any job work provisions. So we all know a job work person who is sending the goods on job work, they need to file ITC 04 form. But this ITC 04 form has no specific late fees, but general provisions, penalty provisions under section 125 of the CGST Act shall be liable. So under this penalty, that for non-filing or incorrect filing of ITC 04, penalty can be levied up to 25,000. Then in case if there is any e-waybill violation while sending the goods on job work, the penalty can be 10,000 or the tax amount involved, whichever is higher. If the person has wrongly availed ITC, then in such scenario, penalty can be 100% of the tax plus applicable interest. In case, as we have seen, there is a timeline to get back the goods. If the goods are not returned in time, then in such scenario, GST is applicable on such goods. Then interest shall be calculated from the effective date. So these are all the penalty provisions which are applicable for any non-compliance with job work provisions. Next, we will see 2 or 3 practical aspects related to job work. Here, can job worker use his inputs in addition to the goods provided by the principal? The job worker is expected to work on the goods sent by the principal, and whether the activity is covered within the scope of job work or not would have to be determined on the basis of facts and circumstances of each case. It is also clarified in Circular 88/7/2019, dated 1/2/2019, that the job worker, in addition to the goods received from the principal, he can use his own goods for providing the services of job work. So the job worker is not constrained to only use the goods given by the principal. He can use his own goods for while doing the job work services, and he can also charge that portion of the amount which is provided by him. Another practical scenario is, can the goods be received back without processing also? So many people have this doubt that if I send the goods for job work, can I get back the goods without doing any process? Section 143 subsection 1 has provided that bring back inputs after completion of job work or otherwise, or capital goods other than molds and dies, jigs and fixtures or tools within 1 year and 3 years respectively of their being sent out to any of his place of business without payment of tax. So here they have given that the goods can be brought back after completion of job work or otherwise. So from this we can say that the goods can be received without processing also. Another practical scenario is, can the goods be supplied from the job worker's premises? That is, instead of getting back the goods and selling the goods to the customer, can the principal manufacturer sell their products directly from the job worker? The answer is yes. The principal can supply such inputs after completion of job work on payment of tax within India, or without payment of tax for export from the premises of the job worker. That is, the principal manufacturer can sell the goods directly from the place of business of job worker instead of getting back the goods before supply. In case the job worker is not registered, then the supply can take place from the premises of the job worker only when the principal shows the premises of the job worker as an additional place of business. This is a very important point. Many people miss this to add, that is, in case the job worker is not registered, then if we are sending, that is, let us say example, we are the principal manufacturer and we are sending our goods to a job worker who is unregistered. In such scenario, we should add their place of business as an additional place of business with us. So only in that scenario, we can direct them to send the goods directly to our customers. So these are all the provisions which are related to job work. Moving on, we will see GST form ITC04. What are all the contents of the form and how to file these forms? First, we will see what is this ITC04. In Rule 45 subsection 3 of the CGST Act, it is given that the principal is required to furnish the details of challan in respect of goods sent to a job worker or goods received from a job worker or sent from one job worker to another job worker during a quarter in form ITC 04 by 25th day of the month succeeding the quarter, or within such period as may be extended by the Commissioner. So Rule 45 subsection 3 has given these details, that is the goods sent to job worker, goods received from job worker, goods sent from one job worker to another job worker. We need to file all these details in form ITC 04. This form ITC 04 has become mandatory from April 2019. A declaration form to be furnished by the registered persons, that is in this case the principal manufacturer, showing the details of inputs or capital goods dispatched to or received from a job worker. This form ITC-04 contains details of inputs and capital goods sent to and received back from such job worker. We have seen from the rule that this form ITC-04 is required to be filed on a quarterly basis for tax periods. However, this quarterly filing is only until September 2021, with effect from 1st October 2021. This form ITC-04 is required to be filed on half-yearly or annual basis, depending on the aggregate turnover of preceding financial year. So from 1st October 2021, there is no quarterly forms. There is either half-yearly, or either we need to file half-yearly basis or annual basis. So this depends on the aggregate turnover. We will discuss the turnover limits in the future slides. As we have seen, now we will see how for whom half-yearly return is applicable and for whom yearly forms is applicable. Those with an annual aggregate turnover of more than 5 crore, for those persons, half-yearly return is applicable. That is, from April to September, they need to file ITC-04 within 25th of October. For the period October to March, they need to file ITC-04 within 25th of April. In case a person's annual aggregate turnover is only limited to 5 crore, then they need to file only yearly forms. The due date for such yearly form is 25th April. Details that has to be declared in ITC-04 are the goods which are dispatched to a job worker, the goods received from job worker, the goods are sent from one job worker to another, job worker sends goods out from his place to a customer. So these are all the details which we are sorry for the interruption. We had network issues. We will continue the session. So the details to be declared in, we have seen the details to be declared in ITC-04. There are two parts in which these details can be provided. That is, the goods are sent to a job worker and the goods received from the job worker. This is the form GST ITC-04. So we have taken a sample form. Here, the details of goods or capital goods sent to job worker and received back will be declared here. the GST number, legal name, trade name will be mentioned. And in table 4, the details of inputs or capital goods sent for job work will be mentioned. We will discuss this table separately. This is the table 5 where we give details of this is the sample ITC04 form. Here in table 4, the details of input or capital goods sent for job work will be mentioned. In this table, that is in table 5, the details of inputs or capital goods received back from the job worker or sent out from business place of job work will be mentioned. Thereafter, the declaration to file the return is provided. We will see all these tables in a very detailed manner. The filing process of ITC04. How to file ITC04? Once we log into the GST portal, we need to go to services, returns, and in that we will find the ITC forms. In GST ITC forms, there will be we will have various forms, and GST ITC04, that is the details of goods or capital goods sent to job worker and received back. We need to select this form. Now we have given prepare online. Thereafter, we need to select the financial year. Then we need to select the return filing period. That is the annual return or half yearly return. We need to mention here. This should be based on our annual aggregate turnover. That as we have seen, if our turnover exceeds 5 crore, then we need to file half yearly returns. If it is less than 5 crore, then annual return will be applicable to us. Once we entered, this will be the form ITC04. Here we have various tables. In table 4, we have details of inputs or capital goods sent for job work. This includes inputs, capital goods directly sent to place of business of job worker. In table 4, we will give details of goods which are sent to the place of business of job worker. Next, we have table 5A. In table 5A, we will give details of inputs or capital goods received back from the job worker to whom we have first sent the goods for job work. In table 5B, we will have the details of inputs or capital goods received back from job worker other than the job worker to whom such goods were originally sent for job work. And in table 5C, we will enter the details of inputs or capital goods sent to job worker and subsequently supplied from premises of job worker, that is subsequently supplied to our customers. This is table 4, that is details of goods sent for job work directly to job worker's place of business. Here we need to mention whether the job worker is a registered person or he is an unregistered person. If he is a registered person, we need to mention the GST details, the challan number, the challan date, and we need to give the item-wise details. That is the type of goods we are sending, then the description of goods, then the unit, that is the unit of measurement, unit quantity code, then the actual quantity of goods sent, then the taxable value and the rate of tax shall be mentioned here. So in this in this table 4B, we need to mention, we need to if it is marked in red, then we need to mandatorily enter those fields. Then thereafter table 5A, that is the details of inputs or capital goods received back from job worker to whom such goods were sent for job work. Here we need to select whether the person is a registered person or unregistered person. Then we need to mention the challan number issued by job worker under which goods have been received back. Then the date of challan issued by the job worker while sending back the goods have to be mentioned. Then the description of goods and the quantity has to be mentioned. Here we also need to mention the nature of job work done by the job worker. This nature of job work is also a mandatory field which has to be mentioned. This is the, since this is a lengthy form, we have given in 2 portions. So if the job worker is a unregistered person, then we need to mention the job work type as unregistered. Then here we need to mandatorily mention the state, that is the state to which such unregistered person belongs. Then we need to give the original challan number, original challan date. Here also we need to give the item-wise details, that is the challan number issued by job worker under which goods have been received back, the date of challan issued by job worker under which goods have been received back. Here also description of goods, quantity and the nature of job work done by the job worker has to be mentioned. If there is any losses or waste, that amount shall also be mentioned along with the quantity shall be mentioned. In table 5B, we need to give details of inputs or capital goods received back from job worker other than job worker to whom such goods were originally sent for job work. So if it is received back from any other job worker other than the person to whom we have originally sent the goods for job work, those details has to be mentioned here. Here also, if the person is a registered person, the mandatory fields has to be entered. If the person is an unregistered person, we need to enter the state under which the person is operating. Table 5B, we need to mention the details of inputs or capital goods received back from job worker other than job worker to whom such goods were originally sent for job work. So these are all the quantities and quantity details, and if any losses or waste, that amount shall also be mentioned. Table 5C, we need to mention details of inputs or capital goods sent to job worker and subsequently supplied from premises of job worker. So here also we need to mention whether the person is a registered person or unregistered person, the invoice number, invoice date, in which cases the supplied from premises of job worker issued by the principal. Then the description of goods should be mentioned and the quantity of goods should be mentioned. Here also we need to mandatorily mention the nature of job work undertaken by the job worker. If any losses and waste, we need to mention those fields also. To summarize the above tables, here we have listed the mandatory fields which need to be mentioned. So the GSTIN of job worker, this has to be filled when the job worker is registered. This can be left blank when job worker is an unregistered person. if the job worker is an unregistered person, then we need to mandatorily mention the state, whether the job worker is located in an SEZ or non-SEZ area. We need to mark that category. Then the challan number has to be mandatorily mentioned. The challan number issued to job worker has to be mentioned, and that challan number can be a maximum of 16 digits. It can be an alphanumeric number. Challan date has to be mandatorily mentioned. It should be in date, month, year format. The goods type has to be mandatorily mentioned. Whether the goods are inputs or capital goods, we need to mention separately. The description of the goods is allowed. The maximum 70 characters can be mentioned. Then the unit of measurement has to be mentioned for the goods sent. Then the quantity of goods has to be mandatorily mentioned. The taxable value that has to be mentioned mandatorily. Total taxable value as per challan has to be mentioned. The tax rate has to be mentioned mandatorily. That is the IGST, if IGST or CGST, SGST has to be mentioned. Cess, if any applicable, that amount shall also be mentioned. We came to the end of the session. If there is any queries, we will take up in 5 minutes. It has been found that the taxpayer has been unable to file GST ITC 04 due to technical glitches. Taxpayer has many times raised a ticket in GST portal, but has not got proper response, has not got a clear response. Ramamurthy sir, can you please mail us the details, sir? We will try it from our end also. We will see what is the issue. taxpayer was able to file GST ITC 04 quarterly, but has been unable to file GST ITC 04 half yearly. Sir, please check in the portal what is the filing window you have opted. So please check whether you can change that. We are textile manufacturers. We are sending our goods for job work. The goods sent for job work may be with the job worker at the end of a half year. Is there any provision to show the stock with the job worker in ITC 04 form, or we should report only the completed job work transaction? Sir, the ITC 04 is a movement-based statement. It is not a stock statement. So the goods lying with job workers is not required to be reported, sir. Only when we get back the goods, we need to report. But we need to make sure that we get back the goods within 1 year. I have uploaded all the details using offline tool, but the error is coming while filing. Can you guide with that? Priya ma'am, can you please mail us, ma'am? We will check and get back to you. Whether invisible loss should be declared or not. Sir, invisible loss is not separately reported. So abnormal or unexplained loss can be explained. It is not a mandatory field in the form also. We have shared our mail ID in the chat box. If you have any further queries, please mail us. Please request the participants to mail us the queries. As we have a lot more queries, we can get back on the mail. Thank you for attending the session.